Kate, do you know who Charles Ponzi is?
I can take a guess.
Go for it.
He's the creator of the Ponzi scheme.
Right. Can you briefly explain to me how a Ponzi scheme works? Or what you think a Ponzi scheme is? There's
a promise of... A promise is made, and the promise is not fulfilled.
It's part of it. It's you're borrowing money from one person to give it to another, and it kind of builds out and leveraging your initial investors to give returns to more investors, and you kind of get same thing Bernie Madoff did.
You're borrowing you're accepting funds from someone in order to fulfill your return on another person's investment.
Exactly. We know what Ponzi schemes are. We've heard of them before. They've been around forever. We've heard of Charles Ponzi. Why do so many people continue to fall for Ponzi schemes, do you think?
Because it might look different every time, or it might sound believable. Or some people aren't good at filtering the good old, if it's too good to be true, it's probably not true.
Well, it's true that anyone can fall for an investment scheme or a Ponzi scheme, but Americans over 60 years old are in one of the highest risk groups. Listen to this. In a recent report from the FBI, it shows that Americans over 60 years old lost almost $240 million in investment scams in the year 2021 alone.
Wow.
According to data, the average victim lost about $115,000. How do scammers like Charles Ponzi and Bernie Madoff and others continue to fool thousands of investors each year out of their hard-earned money? Hi, my name is Chris Wakefield.
And I'm Kate Arndt.
And on this show, we are going to explore what makes our economy tick. We'll interview the experts, learn about how economic changes can impact you at home, and we'll find a way to make it make sense. Episode 3, Investment Scams.
This podcast is brought to you by Bedel Financial Consulting. Founded in 1989, our client-first approach is built on transparency and trust. No commissions, no products, no conflicts of interest. Just confidence and peace of mind. Trust Bedel.
Kate, I want to start by telling you the story of George R. McCown, 71 years old, from Carmel, Indiana, and Richard E. Gearhart, 66 years old, from Lowell, Indiana. And by the way, Kate, do you know where Lowell, Indiana is?
I do, actually, off 65. I passed it last weekend.
Did you really?
Yeah.
Nice.
And my cousin worked there for one summer.
Okay. It's about 40 or minutes so south of Gary, Indiana, kind of in between that sweet spot of Lafayette and Gary a little bit. So how is Lowell? Do you like it? Good town?
You know, I actually think I stopped to fill up my tank of gas there. It seemed okay. I mean, it's a great place to live.
In 2008, Richard and his friend George started a company in Indianapolis called Asset Preservation Specialists, Inc. And through this company, Richard and George claimed to sell investment securities to their clients and manage portfolios. If you were to meet with their team, their sales pitch was quite convincing. They promised if you transferred your cash, retirement accounts, pensions, annuities, or 401k plans to them, they would guarantee a quarterly return of, get this, 6 to 8%. And they promised there was no risk to your initial investment.
I heard one word 2 times in that sentence, and the key word is promise. I really think a lot of these go wrong with the whole concept of promising a return. We know that's not allowed.
Well, if potential clients of asset protection specialists were feeling unsure of things, Richard and George assured them by saying their initial investment could be returned to them within 30 days if requested. For a while, Richard Gearhart and George McCown were gaining new clients and sending their existing clients statements that showed substantial gains on their investments. As new investors across central Indiana handed over their 401ks and pensions, asset protection specialists seemed to be doing exactly what they promised. At its height, this firm, Kate, had 25 clients, most of them between the ages of 50 and 90 years old, and they had together invested about $5.2 million. So we're talking high stakes now, okay? Things were going great until, and there's always an until, Richard Gearhart filed for bankruptcy
Oh my gosh.
in 2013. It is at that point most of the clients discovered they had fallen victim to a massive Ponzi scheme. So what really happened? Almost none of what Richard and George told their clients obviously was true. They were not purchasing investment securities with their clients' retirement money. Their firm, Asset Preservation Specialists, Inc., was not registered with the Securities and Exchange Commission, or FINRA, the Financial Industry Regulation Authority. FINRA, by the way, is the industry self-regulatory organization that oversees member brokerage firms and exchange markets. Richard E. Gearhart wasn't even a registered broker or advisor with FINRA. And how do we know this? It's actually pretty easy to find out if someone is a registered broker with the SEC and FINRA. In fact, it's so easy, Kate. We're going to do it right now.
Let's do it.
Let's do it. I have my laptop here. We are going to go to brokercheck.finra.org. I'm going to put in a name. I wonder if I know anyone who might... Oh, I know. Kate Arndt. I'm going to put your name in the search bar, and here your name pops up. It shows me your organization you work for, which is...
Bedel Financial Consulting.
Bedel Financial Consulting. And it shows me if there have been any complaints to the SEC about you. So I'm going to open that up now, and I see there are 0 disclosures, 0 complaints. It shows your license, how long you are licensed, and which firm you work for. Everything is right there. So if you were to approach me and say, Chris, I work in investment management, I've got a great deal for you, the first thing I would do would be to go to this website to check and make sure you're registered and you're on the up and up. Now, when it comes to Richard Gearhart's partner in crime, George R. McCown, things happened a bit differently. He was registered with FINRA, but if we look closely, we'll see there's a very important lesson to be learned. We see a laundry list of allegations and convictions on his record, but we have to pay very close attention to the dates. Let's go back to 2008 when Richard and George first started approaching potential investors. If we do that, we see that the company George McCown claimed to be working for, Asset Preservation Specialists, Inc., is not registered with the SEC. Any potential investor who did their due diligence when being approached to hand over their money would have noticed this, and it should have been a big red flag and a warning to stay away. In the end, George and his partner Richard took more than $5.2 million from hopeful investors, and they squandered it all on personal items and lifestyle purchases like houses and cars. All the while, they were sending their clients fake statements showing false returns. After 5 years of running this scam, Richard and George were finally indicted by the U.S. Attorney's Office in Northern Indiana in December of 2016. After pleading guilty to conspiracy to commit securities fraud and wire fraud in May of 2002, they were sentenced to 5 to 7 years in federal prison in order to pay $5.2 million in restitution to their victims. So, Kate, my question is this. How is it, even though we all know the stories of fraudsters like Charles Ponzi and Bernie Madoff, people continue to fall for these investment scams again?
Is it the character of the people?
It happened right here in our backyard in central Indiana to 25 people for $5.2 million. I asked someone who was very familiar with investment management that question.
My name is Bill Wendling, and I'm a Chief Investment Officer and Senior Portfolio Manager with Bedel Financial.
And Bill has a theory on why people keep getting caught in these Ponzi schemes.
You know, there must be something in our mental makeup that has us searching for great rewards, great returns, and if we can get it in an easy way, we love it. Maybe we love the shortcut. I don't know. But for whatever reason, we like the idea of being able to earn a great return quickly and being able to take advantage of that.
Bill says when it comes to the scam Richard Gearhart and George McCown pulled on their investors, the red flags are pretty obvious, like you said, Kate. Let's start with the pair making a guaranteed return of 6 to 8% to new investors. I asked Bill if that was normal.
No. Almost all the investments out there do not have guaranteed returns. So if there's a broker that's coming at you and saying, here's a guaranteed return that you can get, that should definitely be a flag. I think it's good to have in the back of your mind kind of a scale of returns. And if you're thinking of guaranteed returns, yeah, there are some investments where you can put money into a CD and know you're going to earn X% over a 1 year or 3-year period. You can get those kind of returns. Those guaranteed returns, though, need to be low. You're thinking low single digits. And maybe in the environment we're in right now, anywhere from 2 to 4%, anything above that, I'm definitely concerned when you're talking about the risk of an investment. But on the other side, if somebody is guaranteeing that you can get high single-digit returns and even double-digit returns, that may be a goal of an investment, but to guarantee it, absolutely not. We do a lot of digging into all sorts of investments here, and a lot of them have some really good characteristics to them, good return potential, but they all come with risks. And so when you're hearing about an investment that has returns that just seem like they're too good to be true, at a minimum, you need to take a step back. And very likely you should just walk away. But anytime the adage comes up, it's too good to be true, there's a reason why that's a common saying, because it does hold true, most of the time.
And that's exactly what you said, Kate. If it sounds too good to be true, it probably is, especially when it comes to guaranteeing those types of returns. The next red flag Bill noticed is that Richard Gearhart and his company were not registered with the SEC or FINRA. I asked him if he would ever consider handing over his money to an investment firm or broker that was not registered.
I would not. Yeah, and it's not even guaranteeing you safety that if you go with somebody who's registered that there aren't going to be problems. But at least there's a base level of scrutiny that they've had to go through just to meet that registration requirement. So at a minimum, go with somebody that has gone through some scrutiny. They have to have some kind of a securities record there tied to them. You can do research online to see have they run into any problems in the past. Just a few minutes of research online can save you years of headaches down the road.
And what about Richard and George asking their victims to empty out the entirety of their retirement accounts?
We all grow up hearing, don't put all of your eggs in one basket. And if you were, just carrying a carton of eggs and you tripped and fell, and now you know why you don't put all your eggs in one basket, because they're all destroyed. Why people would want to do that with their investments, I don't know, because they've heard all along, don't do this.
Bill also says just being selected to be a part of this special investment opportunity with super high promise returns should be enough to get your antennae up.
When it comes to money, we're none of us are special. So to be given a special opportunity, something there is not right. So if they're going to another person in central Indiana saying, here's this unique opportunity, and you're going to get this is our guaranteed rate of return, it's in a short amount of time frame, you just got to step back and say, why me?
Kate, one of the things that I've always been miffed by with these investment scams is someone comes to you with an opportunity and you're going to make all this money back, Chris, and it's going to be great. I always think, why wouldn't they take this opportunity to Bill Gates or Jeff Bezos or someone who's like a super billionaire and make a ton of money? Why me? Like Bill said, why me?
That could be some of the appeal of, I've got this great opportunity, I'm going to bring it to you, an everyday Joe.
But if they really wanted to make money, they'd go call a millionaire a billionaire.
A lot of people don't have Jeff Bezos' phone number on.
You don't have him on your
speed
phone?
Dial.
I do. Maybe
Amazon customer support, but not Jeff's direct.
Just 1-800 Amazon. Can I speak to Jeff, please? That is hilarious. So sure, maybe the warning signs and red flags for old school investment scams like Ponzi schemes are now, for us, easy to spot. But what about investment scams that are a little more modern?
Make It Make Sense is brought to you by Bedel Financial Consulting. Fee-only, comprehensive wealth management for all generations. Trust Bedel.
The world is not anymore the way it used to be. No, no, no. Be connected. Wow. Be connected.
Kate, that is the voice of Carlos Matos, and he's on stage at the 2017 conference in Thailand for a crypto trading website called BitConnect. He was very excited. Do you know what BitConnect is, Kate?
I've never heard of it, actually, but I knew this was going to be something crypto related. Okay,
I'll try my best to sum up what BitConnect is. Founded in 2016. Founded in 2016, BitConnect is an online platform where investors could deposit Bitcoin into an account and exchange it for something called BitConnect coin, or BCC. Then you could lend your BitConnect coin to others on the platform and gain interest off those loans. BitConnect claimed to have a proprietary AI algorithm that maximized returns loaning out BCC. The platform claimed the mysterious algorithm would ensure you did not lose any money, and they offered investors returns as much as 40% a month.
Yeah, my too good to be true radar is going off right now.
On top of that, the fledgling platform introduced a pyramid scheme-style referral system and promised those participants a risk-free return of 127%.
Risk-free return?
Here we go again with the warning signs, like promising high returns. In addition, BitConnect promised that you'd be able to spend your BitConnect coin at merchants. They offered zero evidence to back up their promises, and the website didn't offer any information about ownership, a registered address, a physical address, phone number of the company, none of that.
That's so interesting because the Bitcoin or crypto world is all about being able to trace, and there's the wallets and you
transparency.
Can track it. Yes, transparency. So no wonder.
The website also had numerous grammar and spelling mistakes.
Oh my gosh, come on.
One huge, major red flag is that your principal investment with BitConnect was tied up, forget this,
how long?
299 days.
What? That's so specific.
You could not pull out your principal investment for 299 days. Bill Windling tells me that is a huge warning sign that you were probably caught in a scam.
It depends on the investment, but in many cases, you can pull your principal out the next day. A lot of investments do have that liquidity where if you buy an investment today, you can sell it tomorrow and you can have access to your funds. You may not like the price you get by selling it tomorrow, but that liquidity is there. And so if somebody is coming to you and saying, once you invest your money, there's a specific lockup period, there really needs to be, in my mind, a couple of reasons for that. One could be some kind of a legal reason where just securities laws say there's some kind of a lockup period. And there are some less liquid investments where, you can ask for your money, but maybe a few times throughout the year. And so maybe you do have to wait a few quarters and ultimately maybe even longer than that to get full access to your money. But the idea that there would be a specific lockup period and 299 days sounds very odd.
And just like you, Kate, Bill thinks that promised return of 40 to 127% seems just a little bit too high.
In the history of investing, how often are there investments that offer, a 40% return on an annual basis? In the history of investing, the only way to get unusually high returns is to be able to, buy real estate or buy something where you're locking up your money, you're giving up that liquidity in exchange for, earning some return over the next few years. But even then, it's not 40%. Maybe it's low double digits. Maybe it's into the teens kind of returns. But if somebody's coming to you and saying, we got a great opportunity, you can earn 40%, why are they coming to you for that? Why are you the lucky person that gets to take advantage of this investment and earn 40% when surely they have family and friends that are higher up on their organizational structure, their family tree, that they should be offering those to? No, they're offering it to you because they think you might believe it, and if they can convince you to do that, then it's advancing their fraud.
And as you might expect, it turns out that BitConnect was a total scam. After some initial complaints about liquidity and transparency, on November 7, 2017, the UK government issued BitConnect a notice that it had 2 months to prove its legitimacy or it would be dissolved. On January 3, 2018, a Texas Securities Board issued a cease and desist order and accused BitConnect of false and misleading statements and cited its failure to disclose the identity of principals in the company, a physical address, and any assets and liabilities, along with other crucial financial information. Finally, on January 17, 2018, BitConnect, blaming bad press, permanently shut down. It wasn't their fault. It was the bad press that shut them down.
I thought all news is good news, or all press is good press.
The publicly traded BitConnect coin crashed 80% overnight. BitConnect promised to refund outstanding loans, but of course they never did. Thousands.
The sad thing about all of this is that when you're promising 40% or 120% returns, people are going to fall victim to the whole all your eggs in one basket idea because they think it's a stable, guaranteed return.
Thousands of investors lost more than $2 billion.
With a B.
With a B. A big B also. When the scam was finally exposed, many people speculated that the advanced BitConnect trading algorithm never even really existed. One interesting twist to this BitConnect saga is that several investors knew it was probably a fraud, but they thought they would be able to get their money out before the house of cards came tumbling down. The same thing happened with several victims of Bernie Madoff. Bill tells me that's obviously not the smartest strategy.
Especially when there's a 299-day lockup.
That's part of the rush of being able to buy into these investments and try to get that kind of return is get in and get out. Now, if it's a legal investment, and like the AMC, the meme stocks, as far as I can tell, I don't think anything illegal was happening there. It was just people were pumping up a stock and driving out some of the short sellers, and that's kind of the way the markets are working. And at least from what I've heard so far, I haven't seen anything wrong with that. But getting in and getting out, it is impossible to time things and get it right. If you're looking at an illegal investment, you could have got in with the Madoff investments and got out before it was discovered that it was a Ponzi scheme. But the people then that have to go and try to find all this money will actually claw back your earnings. And you may have thought you got out of it fine, and now they're actually going to take all of your earnings back, add it to the pool of money to divide out among all the defrauded investors. And see, so even in that case, you thought you got out in time, but you didn't. You're still going to lose money just like everybody else did.
I asked Bill how investors could be so trusting with a platform that didn't even have an address listed on their website.
I think it's funny where if somebody comes up to you and says, Chris, I need to borrow some money, you're probably going to ask them questions. And maybe you'll decide to loan it to them, maybe you won't, but you'll ask questions. You're going to know something about that person. There's always going to be already going to be a history there between you and them to where you know where they're coming from, you know what they're like. Are they a good risk? Is this somebody you want to help? And that's just if somebody that you know comes up and asks you. Well, here people are putting money into some kind of an account online and they know nothing. There's no information about people involved. There's just nothing there, and people are willing to do that. But if the next door neighbor comes over and asks that same person for a loan, I don't know if I can do that.
The BitConnect scam worked so well because it took something really complicated, investing in cryptocurrencies, and it made it easy to understand for everyday investors. And that's where investment scams are headed now, online and into the crypto world. One quick Google search of crypto and scam yields over 160 million results. You flagged it right away. You said, this is about crypto.
It's hard because I think there is some legitimacy. There totally is legitimacy in the crypto space, but you really have to vet the projects. And a lot of people just don't understand. And I'm talking about me. I don't understand the fine print. So it's a difficult and risky space to be in.
And scammers are counting on you not knowing everything about it. And that's where they say, I'll make it make sense for you, no pun intended. And just give me your money. Trust me, I'll make it work for you.
Totally.
Bill Windling says whether it's old school like a Ponzi scheme or new school like crypto trading scheme, it's important to know the warning signs.
Some of the red flags really include promised returns. What kind of return potential are they providing? How secure is that return? Is it a guaranteed return? There's no risk here. This is an unusual opportunity. Maybe it's a limited time opportunity where there's just a brief window of time where you can make this investment because something's going to happen within the next few weeks, next couple of months, and so you have to get in now. So if there's any kind of pressure from a timing standpoint, that's definitely something that jumps out at me. Again, it needs to go back to somebody understanding, why am I getting this opportunity?
So while Bill keeps a watchful eye over investors' money at Bedel Financial, and Richard Gearhart and his partner George McCown spend the next few years in federal prison, we'll keep trying to make it make sense.
Make It Make Sense is hosted by Kate Arndt and Chris Wakefield. It is produced by Bedel Financial and recorded at IBJ headquarters in Indianapolis, Indiana. The graphics are by the lovely Amy House. And for show notes and financial news and information, visit bedelfinancial.com/podcast.